Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments in the chat room for me to answer at a later date. Okay, end of May, and it's been a rocky month. The S&P clearly printing an outside bar for the month. So it's been tough, when you just look at the monthly charts. Last month we closed near the highs, and this month we closed near the lows. So lots going on to try and make that happen. And again, the global slowdown is what I think is carrying the market weaker. So today I briefly wanted to talk about Germany and Japan because I didn't get a chance to talk about them on Wednesday. And then I'm going to do a deep dive into the marijuana names and just work through them. And again, if the overall market is going to pull down here, I think you want to relax on the marijuana names. These high growth stocks tend to pull back even harder than the index many times. So it would be a good place to just at least be aware for the potential of a big pullback, and perhaps when we start to get some better bases built, we could look to get back into those stocks. So first of all, let's jump in and get over to the other charts here. Okay, so the chart I have set up here is the daily view, and on the left is the Nikkei, and on the right is the DAX. And again, one in Asia, one in Europe. And the point I want to make here is that the DAX, or sorry, the Nikkei really needs to hold this 21,000 level, and below here is the weekly chart, so we'll get into that. But you can see why this level is so important. And Japan was, central bank was in buying again on the 29th. So they're buying more stock. They bought almost as much in May as they did in December during this kind of period. So really trying to hold this 21,000 level, and I think that makes sense, but we'll see if they're able to hold that up. For Germany, there's a level in here around 12,000 that's important. And I've since moved it down to 11,800 or 750 because of this little kind of test area here where we held below and then jumped above. So looking here, this is a pretty important level. And again, these are end of day charts on Wednesday and for Tuesday, and they hadn't been updated. I pre-recorded this for Friday morning as I'm traveling. So here's the Nikkei, and what we see here is this 21,000 level goes back, and it really marks support and resistance through that whole topping structure. And then over here on the left, it was also an important place on the chart. So we have lots of reasons to watch this 21 level hold, but right now we have a lower low, now a lower high, and you see this consolidation period in here of 4 to 5 weeks. We also saw this same type of price action back in 2015, and then it just let go when they couldn't support it, and down it went. And they were buying ETFs back then to hold up the market as well. They started that in 2013. So we're sitting at a very vulnerable place, I think. Same sort of, made a lower low, trying to prevent it. Now it's made a lower high, trying not to let it make a lower low. And so they've been trying to defend this 21,000 level. We'll see if that holds up. But again, if this starts to break away, I think that would be a second major drop in the Asian markets after the China drop. And Germany, we have that 11,750 I mentioned, or 11,800, and you can just see that would put us below this low, and over here on the far right, just above this prior high in July of 2015. So we've got some reasons to keep looking in here. And as long as Germany can hold above that, I think that's helpful. But again, the EU's got a whole bunch of issues, and on Wednesday, the Italian government was asking Europe to back their bonds, and obviously they have as big a bond problem as Japan does. So there's lots of places to look for trouble if you want to find it. And these charts are certainly testing our nerve. And again, the fact that Germany could only rally up just barely above the neckline and then roll back over would be concerning from a technical perspective, just standing back. So you have your head and shoulders topping structure, and you fall below, you bounce back up, and then you fail on the topping structure. And the other thing to, let me just zoom this in, when I'm on the 2 per page mode, I have to have the screen shrunk. But what we see here, just let's roll this back a little bit. And again, you know, a relatively big uptrend, right? But here's 11,000, and you can just see that this 11,000 was pretty important all the way through here. Made it up to 12.3. Well, we topped here at 12.5. So even if this was a left shoulder ahead, and we're kind of building a right shoulder over here, but the work I've done seems like it's already over. Like this topping structure is already finished, and we're on the right shoulder coming down. So that's kind of what I'm expecting. And so as we work through this market, really want to see that level hold in order for this bull market to continue. But again, that is a problem for me. Now, one of the things on the, oops, one more chart, sorry. Okay, and one more thing on this is on the point and figure chart, you can see for the Nikkei how important this 21,000 level is. If it starts to break below here, this is a pretty crucial level. So it's got a little bit of room yet, but 1, 2, 3, just above 4, 5, 6. There's been lots of places where this is held, 7,000. So between these 2 areas, pretty critical place on the chart. Don't want to see those drop. And then here's the German market, and what we see here is, you know, we've had this bull market rally starting up. It made above the downtrend line, so we get this blue line, and we've been making higher lows and higher highs, so everything looks okay. But I think the real issue, as you can see, is if we drop below here, here, you know, these are pretty close levels to watch. And so that support for that whole top that was built last year in 2018, if that would start to give way, that would be a problem for us. Now, I've shown the charts also as ETFs, and what you see is the chart for, I've used hedge charts so that it actually removes the effect of the US dollar. So these charts should look more like the actual Nikkei and DAX than, say, the EWJ and the EWG. Looking at these charts here, you can just see this 29.5 level trying to hold today. And again, going back to November, December, that was a pretty important shelf before it fell down. And then for Germany here, we've already kind of lost support of the previous 2 months. And the next major place here would be 25.5 on the chart. But in all cases, including the US market, the PPO is moving below 0. So that's just bearish in general. Looking at the HEWJ, you could just see this rolling over 200-day moving average, getting up to it and failing at it. And again, that 4 weeks of consolidation I talked about earlier, same thing right under the 40-week moving average. And looking over here on HEWG, the German market, so we got above it, and we've been above it for a while, but really we just got up into a resistance layer, and we seem to be stuck there. So this is why I'm expecting these charts to roll over, and until they start to show some improvement and shock me to the upside, that's what it would take. And I also don't hear anything from, you know, from as an example, the Canadian government just said, you know, we don't really foresee any rate changes from now till September, October, when there's a federal election in Canada. And in the U.S., you know, we've got a couple of Fed meetings, but everybody still continues to think it's not going to be too much of a problem. I, on the other hand, think the global growth trend is really bad, and it's that change in global growth, contraction actually, that is starting to create pressure on the stocks. And again, the stock markets will top long before the actual economy's top. So you'll see the jobs indicators and all that kind of stuff. They don't necessarily have to top with the stock market. And the reason that I think this is so critical is, as I wrote on on last weekend's market roundup was there's a big bond positioning that lines everything up right at these trend lines. So if everything's about to break at the same time, and we see the same thing on the euro, the Aussie dollar, the British pound, all compared to the US dollar, all breaking trend lines and stuff. It's when all of these assets, cross assets, all start to break through barriers that were there before or support levels that were there before. So either to the upside or to the downside. Okay, looking at EWJ, it paints a little bit more difficult picture, and the reason is because of the, let's just show that. So you see this lower highs, and this is okay, but on EWJ it also has the effect of the US dollar, so the drop looks more severe here than it is. But you can notice that this one almost lines up better. It's almost like the algorithms are trading the EWJ more than they're trading the Nikkei. Anyway, here's Germany rolling over, and again, both of these are back below their downsloping 40-week moving averages. That's just bearish, so that's a big problem for us. Okay, I think I've made that point clear on the market roundup. On the weekend, I'll have hopefully market closes for everything on the Friday night and go through a big month-end review. So what I wanted to do here was talk about the marijuana names, and the reason I want to go through these, some of these are going to be Canadian stocks just because there's so many Canadian names in this space. But I can't tell you how many people are still holding on to the marijuana stocks, and I get it. They've been the fastest movers, and they've been good, and there's been big volatility before, and it's all worked out well. My main point is that when equities fall at an index level, so let's say the S&P 500, that when they crack, they usually take everything with them. So what we say, the correlation goes to 1, where everything behaves the same. Now there are a few things that will behave differently. To me, a Walmart pattern right now looks more set to break out to the upside, but Walmart is always a defensive name, and maybe with their Jet.com acquisition for internet sales, they've figured that out, and perhaps that will be growthy enough to hold them up if the overall market was to decline. Anyway, I want to go through these marijuana names, and just let's start first of all with a look through the summary of the chart. And the one thing, so the day I'm recording this is a big down day for the markets. I think the Dow's down 400, and so just if we just take the scooter ranking, so those are the largest stocks. They have to be listed on the Canadian Stock Exchange or the US to get an SCTR ranking, and they have to fit into something, fit into one of the groups for it. So stocks on the venture exchange or other exchanges don't qualify, and they have to have a price greater than $1. So there's a whole bunch of issues. So what you see here, though, is on a down day in the Canadian market, this pretty much whole group was painted red. And that is my point, is that just because you're in one of the fastest growth areas, it doesn't necessarily mean that investors will stay with the stock because of its growth. So if they start to break down, and when they do that, what I mean by breakdown, if they start to change their physical thinking about how the overall market is handling growth, so in other words, it moves to value instead of growth, or moves to defense instead of growth stocks, then they're going to be less likely to add to positions in growth, even if they're up. And so, here's let's just pick this name. So here's Pyxis. And looking at the chart, I mean, it was pretty weak to begin with, but some of these other ones like Canopy Growth, you could just see that stock is starting to break down. So the main reason I want to highlight this is there's probably 10 or 15 charts that look really good in this area, and then the rest of them look pretty bad. But the idea being, have a nice chart list all set up so that when we do get a market bottom, then at least you know which stocks to go back into, and you can try to attack them. So on this little weed chart, well, here, let's go to the larger version. This is canopy growth, and here's the weekly chart. But you can see that all through that October, November, December period, it pulled down. And again, there was a Weed Wednesday in Canada in there, so that was part of it too. But it pulled down and it pretty much bottomed with the rest of the stocks in the market. It rallied up into the early part of the year and has gone sideways since. And this one is the big flagship for it. So until that growth kicks back in, or the move to growth kicks back in, I would be leery trying to stay in these names. But again, put them on your radar so when they do turn, you're ready. And a good example would be Shopify. It took off, and it was one of those stocks that was leading, pulled back in October, November, December, and then went on almost a doubling. So lots of good price action there. So I have these stocks sorted based not on their daily or not on their weekly RSI, but on their daily RSI. And let me just put that on the chart here. And so what I did was I have a marijuana chart list called marijuana, and then I run my scan against that list and say rank by RSI. And so this isn't the top one on the list, but the reason that I was trying to do that was to try and get which stocks were stronger. But you can clearly see here, if you're looking before today, it looked like the stock was trying to bottom. We were building higher lows, hadn't had a close as low for the last 2 weeks, and things were starting to turn up. And these big selling tall candle bars here give us an idea that the market is having trouble supporting a higher price. But when it does start to break down, you can see this is a serious let go. And looking on the daily chart over here, obviously 55 really needs to hold. We're right at the 200-day moving average. Again, the U.S. equity market is only off a couple of weeks now. Well, I guess it's a month. It topped May 1. But when did this chart top? May 1. So I think believing that we are different than the S&P 500 in this case is a tough one. And so what we want to work on here is just getting set up for the next set of rallies, and go through and find all the growth stocks you want. Try and use those names to help you pick. But one thing I liked, so this one is called Namaste Technologies, and it has a big downtrend line here, and it's just starting to break out in momentum now. If this can carry higher, that's bullish. I do like the fact that it's kind of been basing for 3 months, but again, I don't really like it from the perspective of timing with the S&P. So let's just go through these as a group. And by doing so, what we're going to see here is some of them are doing quite well. This is Scott's Fertilizer, and so it's been rallying off the December low, $57 up to $93, so almost a double, and consolidating sideways for 4 months. But this hasn't been one of the better performers. You can see it was dropping all of 2018. So I'm not so sure that it's actually any different, or if it's just local seasonality turning up in spring. Click. So this stock is making a nice move this week, and I really like the shape of the chart in terms of the fact that it's been gently rallying higher. Now, $4 to $6 is a 50% a doubling, and we'll see that on lots of the charts. I think the real question is, like here as an example, this swing was 75 cents on $2, so 30% of it was in 1 week. We're having another week like that. We're below the downsloping 40-week moving average, so we still have to be cautious here. Organogram is one of the nicest charts, just gently rising, and you can see how it pulled back in the previous market correction. So it'd be a good time to be aware that if the market was going to start to change, that this would be a place to look for it. And then looking at integrated cannabis, this one's just grinding sideways, nothing really here. GW Pharmaceuticals, this one actually broke out to new highs around the 1st of May and has just consolidated sideways. Again, trying to focus on the benefits of marijuana in medicine. So here's medical marijuana, and this is a big downslope, and the reason that it probably kicked up a high RSI reading was this big bar last week, changing the trend. But in general, everything's still leaving here, and I wouldn't want to own it. Valen's growth work is a really nice chart. This one, it's been consolidating for about 5 or 6 weeks now. And again, I would expect it to pull back, but this is a name that I think is well set up heading into your next run higher on these names. Canadian Cannabis, pretty weak. United Cannabis, again, any of these that had recent spurts will kick up the RSI. The problem is, just the overall downtrend is way too big here. So I would try to stay with stuff that has been uptrending and is in a pullback position. This new strike was affiliated with the Tragically Hip band and is trying to get somewhere, but again, all the moving average is just close and it's sitting right at a flat PPO, so that's usually not the way we want it. We'd like to watch it turn up from there, and then that's an entry, but in that case, that chart's pretty flat. So here's Harvest One Cannabis. This one's been declining for 2 or 3 months. Don't like the chart shape. It's not a great one. Sproutly, this little one has been doing quite well, but it was pretty much all in a week and then gone sideways for 10. So that one, I would put it on your list, and the only reason was after the IPO, it rallied back up to that kind of height level, and then you get some sort of a pullback, and perhaps it's ready to run. Hexo. So this chart's been definitely one of the strongest, and it recently broke out above its prior highs and then failed late April and has pulled back and is sitting right at the 10-week moving average. Now, again, if they get going, great, but this is one to have on your list, I think, and it's listed as HEXO in the US, if I'm not mistaken, and HEXO.to in Canada. This True Leaf Cannabis, big IPO spurt, pulled back, rounded out, and now below the 10-week moving average, too early for a 40-week. I think it's an okay place to look, but nothing great. This Corbus Pharmaceuticals has been building this narrowing pattern, but the scale on it isn't nearly moving as fast as some of the other names, so I would probably avoid it. Canada, Canna Royalty here, O.ca, OH.ca. You can see a nice uptrend on the stock and gently winding higher. It did experience a big pullback here from $11 to $5, so that's a 50% haircut. If you get that same sort of opportunity, at least have it on your radar, and if it starts to make higher highs, then you can start to look back in on it. Fire and Flower, this one's pretty weak, nothing to really like yet. Afria, this one's got all kinds of baggage on the chart itself. You can see a big downslope for almost 8 or 9 months here. It did not rally above the previous October highs or get anywhere near it, so that's concerning. It's trying to hold this horizontal support and resistance, and that level goes back to what we call gap support here. So it's filled this gap a couple of times, and now the question is, if it doesn't hold here, I would expect it to move aggressively through that level. Medical Cannabis, again, this chart, big downtrend. Do you really want to own it? So it's had some brief good activity, but not enough to make me change my interest in the stocks. Same on Cannabis Rex, Marijuana Company, Cresco Labs. This one was all right, and so maybe added to a list, cl.ca. Afria, again, we already talked about it on the US side. Weed Canopy Growth Corporation. So this one is the big stock in the area, and look at how much the scale compresses. So while it doesn't look like it's gone anywhere, it's because the scale is compressed so much. So this 2-year period shows it from $10 to 70. So nice that it can move up that fast. Okay, Liberty Health Sciences down and to the right, nothing there. Here's CGC, the U.S. listing for Canopy Growth, the one I was just talking about, 2 up here, this one. So the interesting thing about this chart you can see is that it's starting to drop here, just below the 10-week and the 40-week. Just in general, that was below the 10-week was a good place to leave here, and I would just suggest the same. If it doesn't hold, you probably want to go, and that's the ringleader for this group. So try to avoid it. This wheat MD, I actually started to like it, and one of the reasons I like it is the PPO is trying to turn higher above zero. Now, the chart looks dead for a couple of years here, but if they could start to get something going and it starts to kick it up higher, that would be better. Kronos, down sloping and hasn't improved yet, so I'm not wouldn't recommend it. It is near the 200, which has been very nice support for the last 2 years. I would just say, due to the overall weakness in the indexes, let this one play out and try to buy it when the whole market is bottoming, not just when you think this stock is. I think you'd be better served to try and wait for the broader solution. Okay, Curaleaf Holdings, this one recently shot up. It's got some U.S. Retail affiliation going on, but the chart's back below its 10 weeks, so I just let it sit there, let somebody own it. This Planet 13, really nice chart shape, trying to test prior highs, but it hasn't been able to break through those yet. And so right now it's below its 10-week. I think I'd let this trend line break and try and find a lower entry. This is the medical marijuana ETF, and you can see the average is now dropping below the 40-week and is below the 10-week and has been for 5 or 6 weeks now. That's just an avoid until that changes. Oops. Okay, Canagrow, same thing, nothing really going on there. Here's Pikes SPYX, and you can just see this is dead money, really difficult place to play. So just avoid these stocks because they're not trending. TerraSend, same thing. That nice compression on the side of the scale here from $1 to 14, but halfway in the middle at 7, and it looks like it wants to fall below the 2 moving averages, so that would be a problem for me. Even Company, same thing. Trading below, Body and Mind. This one really took off from 75 cents to 350 or whatever, but I think you want to stay with the bigger names that already have some institutional buying showing up. Lexera Bioscience, downtrending for a year, that's hard to own. CV Sciences, this one's just been trending sideways, just below both moving averages. I think it's still a wait and let that go by. This Flower One, really nice IPO, running up higher, but again, everything falling below the 10-week moving average just says wait, but start to market or start to keep track of them. The Green Organic, this one is doing the same thing, down hard and making lower highs in general, so that's a definite avoid. Okay, so with that, hopefully, here's Aurora Cannabis, and what you see on this one is just a sideways grind. It's back below its 10-week. Didn't make higher highs, and so far seems to be making lower highs, so I'd probably try to avoid those to not get into trouble. And there's the US version, Aurora Cannabis. So with that, hopefully I've given you some names to consider in the marijuana space. But what we'll do is, as they start to improve, we'll come back to this chart list and update it at the time when the market bottoms. So thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific Time on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel or on the Stock Charts TV, which has a running list of technical charting informational shows. Thank you.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.